wonderful good morning, everybody. Welcome back to SF Live, episode 120 this morning. In a few short seconds, I'll be joined by Robertson. He's the CEO technician on Twitter. He's at Goldfinger on ceo.ca. Somebody you should definitely follow, take a look at. Super trader in this space and a bit of an expert. And in his recent article, he comments he's got over 40,000 hours of trading under his belt. So not an amateur anymore, at least in my book. So happy to hear from him in a few short seconds. But before we switch over, make sure to follow us on YouTube, follow us on Twitter, hit the like and subscribe button, and make sure to hit that bell icon and the alert button as well. That way you get notified when we go live with another update. Leave a comment, leave a like. If you have a question, use the chat function or use hashtag AskCEO on Twitter. We'll get to those questions at the end of our conversation with Robert as well. And yeah, the chat is open on YouTube as well, so make sure to jump in there and let us know what you think, and we'll try to get to answer those questions as well. Now, let me switch over to Mr. Robert Zinn. Mr. Goldfinger, how are you doing this morning? How are you?
I love when you use my last name, with the Z instead of an S, which is the way it's supposed to be said, I guess. I'm doing very well. I appreciate the invitation here this morning, and certainly there's no shortage of topics.
No, it's like we'll be difficult. We'll be short pressed for time, and I apologize to you before, but it's like we said we were going to do this more often, and then I look at the timestamp of the last interview. It's 4 months ago. It feels like it was yesterday. So I'm glad to have you back on and really appreciate you taking the time. And apologies for the neglect. Like we love our conversation. That's why we got you back on. And lots to talk about, as you said. Let's start with a bit of a hindsight session, maybe. Like we talked in September and we said Trump doesn't matter, Biden doesn't matter. Whoever gets elected, it'll be good for gold. But so far, and that's 4 months from September, nothing has happened really. Like we're pretty flat on gold, but even downtrending if you a little bit from September on, just slightly if you want to draw a very rudimentary line on the gold price chart. Where are we at in the market, Rob?
Yeah, that's an interesting point. So early September, I'm just taking a look at my chart, my gold chart. Gold was about 1940 probably on the day that we spoke. So we're about $90 lower than that right now. And gold is officially one of the most boring assets you could possibly own in the world right now. So yeah, from a long-term technical standpoint, and I've posted a lot of charts about this, you look at like a 20-year chart of gold, this is just a tiny little pullback in the context of a major long-term uptrend. But, we zoom in on the daily chart or the 4-hour, and suddenly, we're just treading water. It's going nowhere fast, right? And there's so many other things, and I'll call them things because I'm not even sure they're really markets, but they're things that people are buying and selling that are way more exciting than gold. And so that's been sort of translating over to the gold mining shares, which are also been sort of treading water and going nowhere fast. But again, long-term technicals are very healthy still, and gold is still in an uptrend. Even on the daily chart, it's in an uptrend. It was much lower a year ago. So it's still, bottom left to upper right. It's just wearing on everybody's patience, and a lot of money has probably just moved out of the gold sector in the last couple of months just because there's way hotter things to chase, right?
But what are our expectations? Let's be realistic. As you said, like we were way lower a year ago, 18 months ago. We were at around $1,200. Like what should our expectations be? What's realistic? I'm personally actually quite happy with 1850 gold. I don't need 2300, 2400 or whatever the analysts are calling for. Right? Like the companies are producing a lot of cash flow. So what should our expectation be?
Yeah, I think that's a good point. I mean, gold is a metal. It's a precious metal. I probably have some here. I'd have to, go out of the camera shot to grab it, but it doesn't do anything. It's just an asset that you own, right? So it doesn't pay a dividend. It doesn't have earnings. So to expect gold to appreciate more than an average of 5 or 10% a year is expecting a lot, quite frankly. But that's a very fair assessment that you made about the gold miners. They're extremely profitable. I wrote an article think it was last Thursday morning where I sort of talked about some other things first. The market that there's no risk in, when there's no risk, we should just chase everything. And I was pointing out sort of the bubble characteristics that we're seeing there out right now out there across the market landscape. And then I segued into gold and why gold is still a long-term store of value, and that it will always have its place at the investment table, especially when some of these bubbles pop. And gold miners are generating a lot of free cash flow right now. They're quite profitable at these gold price levels, and in many ways, mining is one of the key industries that has weathered COVID very well. Extremely well.
And given all the macroeconomic factors, now we got the stimulus package, we got a Democrat in the White House. Just one of the few things, like, and it looks like we're going to war in the Middle East again, and the U.S. Navy is just rolling into the South.
Well, we're going to war in the Middle East again?
It's like it's not even making headline news anymore. It's right, like there's
Oh
stuff
God, I didn't
happening.
even
Like,
know about that.
I don't know, just stuff I saw on Twitter over the weekend. I haven't even had a chance to read up on it, but you see the aircraft carriers rolling into the South China Sea, so tensions are rising worldwide again, and gold is not moving. Like, what should be ours? Like, it seems like we're chasing something that maybe isn't theirs. Like we're chasing a dream. Like what is a price target based on all these factors? Like I have a hard time imagining the upside, and that sounds negative. Like I'm super positive on the space, but where are these high expectations even coming from? Like, you know what I mean? Like, you know what I mean? Like what I'm trying to get
Yeah,
at?
I get what you're saying. So a very simple analysis of reading the news, the news backdrop now, you'd have to say, wow, gold should be at all-time highs. It
Yeah.
should be above 2000. It should be way higher, right? But that's a simplistic analysis. And unfortunately, markets are often a lot more complex than that. And there's constantly moving parts and a multitude of variables that I can't even keep track of, right? But if you think back to March and April of last year, when COVID was really palpable and the fear was so intense, especially in markets, gold had the big drop as everybody went to cash for a couple of weeks and they sold everything. And then the Fed came in and said, we're going to backstop everything. We've got this. And then gold went up. It went from 1450 to over 1700 in a few weeks, I think, right? And so that was actually the market getting ahead of all this stimulus and pricing it in. And gold was in a very strong uptrend all the way until the first week of August. So it had a 4-month rally where it went up $600 an ounce. And this is what a lot of people have trouble grasping about markets, is that they move ahead of the news. They move ahead of the catalyst, right? So that gold and silver run from April to August last year was pricing in all this expansion of the Fed balance sheet and the M2, and probably pricing in some more stimulus. And then we sort of had a hangover, and then we got hit with these vaccines, which is obviously very good for the world if they work, but not so good for the gold fear trade, because a big part of the bull case for gold was predicated upon the economy is going to be really weak, the Fed's going to have to keep doing more and more and more to keep the patient alive, and so on and so forth. And so in the last 2 months, probably a lot of gold's pressure, the weakness on it and the sector, has been this reflation trade. As counterintuitive as that may be, that's actually what's happening. The market is gearing up for high growth in 2021 and getting into all the cyclical sectors and different ways to play it. Whether it's Caterpillar or Freeport McMoran and copper or Target, people are going to spend again because they're going back to work and the economy is getting better, et cetera, et cetera, et cetera. And now we're just seeing it just go. They're just throwing darts at stock symbols, and we're going to buy GameStop. Now we're going to buy Revlon. And the fundamentals don't even matter at this point anymore. It's just people are chasing short squeezes. And that's literally the market that we're existing in today. So gold is not a great short squeeze. There's way more attractive short squeezes out there, and so that's what we're seeing the theory of transitory bubbles in full view right now in January of 2021.
Yeah, fantastic example. You mentioned a couple of like short squeeze stocks. GameStop is one of them. And this morning, again, I was going through my Twitter timeline, and people made reference of First Majestic, and that company has a huge short squeeze outstanding. And do you see a short squeeze like for GameStop? Maybe we'll give some context around it. The stock just shot up. It's still up, I think, over 30% today, based on a short squeeze with more volume than the SPY, right? And it's been insane. Do we expect something to happen like that? Like, do you trade those setups as a trader? Let's talk to you, like you trading those setups, especially in mining.
Well, AG, which is what you just mentioned, is actually a very interesting one because it's technically built up a lot of strength, and it's made higher lows and higher highs for the last several months, which is evidence of relative strength versus the silver or gold sector as a whole. And that short interest, and as you mentioned, the short squeeze possibility there is probably a part of why it's done so well, because we're living in a market where the most heavily shorted stocks are actually doing the best. So yeah, that is so. AG is actually a very interesting technical chart setup. I do not own it, but thanks for putting it on my radar. But as far as like GameStop and like Revlon and this sort of stuff, I was mentioning in my private channel earlier that the problem that somebody like me has in this market environment is I have too much experience and I have a memory. Unfortunately, that's a handicap when you can just throw darts at the Wall Street Journal and make $100,000 a day just chasing all-time highs, right? And I talked to guys who are friends of mine. They're not experienced traders, but they're now day traders, and they're throwing hundreds of thousands of dollars into the market, just gambling on these Wall Street bull setups, chasing all-time highs. It's insanity, and I am not doing it, but obviously I'm costing myself a lot of possible profits because stuff like GameStop, it's an incredible trade. You can get off 10 or 20,000 shares at a clip in a stock like GameStop, and it's moving 20 or 30 points in 10 minutes. So incredible day trading vehicle, but not for the faint of heart and extremely risky. And this goes back to my Thursday morning article that we're in a market where there's no risk, or there's the illusion that there's no risk. And I don't know how this is going to end. And most experienced people will probably sound like me talking about the market now. I don't know how it ends or when exactly it ends, but I know that guys or people that don't know what they're doing in the market, opening a Robinhood account and depositing $300,000 and making $100,000 a day trading GameStop is unsustainable. And I just know that's unsustainable. So I don't know exactly how that's going to end for him or for these other people, but it's unsustainable. And the Fed, this is sort of the side effect, the knock-on domino consequence of all this Fed policy is it's encouraging this mindless speculation environment where we don't want to actually open a real business, and God forbid something like mining where there's a lot of capex and employees and payroll and stuff like that. No, we just want to mindlessly chase altcoins like Link, or companies that are about to go bankrupt like Hertz or GameStop. I mean, it's really ludicrous.
You mentioned so many things in there. There's so much to unpack again, even further. It's like my mind went to the $1,400 stimulus check, and I don't have a date yet. I haven't heard of a date when that's coming, right? But I'm sure not everybody will need the money to plug financial holes. So is that stimulus package just going right back into the market, and right now you can just buy everything until the day?
I mean, I don't know the future, Kai. I wish I knew how everything was going to play out, but I will say that there's a tremendous gap between sort of the haves in the world now and the have-nots, or the people who have less. And I know the people that have less or have not, that stimulus is going to go to pay debt. And it's not going to really affect their lives a whole lot, right? And then there'll be the businesses that profit from those people maybe spending a little more at Target or paying a little bit more off on their car payment or whatever it may be. So it will filter down to the big corporations that will get wealthier, and then the shareholders of those corporations that will get even wealthier, right? But in reality, a lot of the stimulus doesn't help the real economy. And if it is, it's extremely transitory. It's a sugar high that lasts for like a month.
Yeah. No, Best Buy is a stock that comes to mind with the free money. So
Best Buy and
yeah,
GameStop.
seriously, just stocks only go up. Stocks only go up. Let's transfer that.
I haven't been to a GameStop in like 15 years. I didn't even know it was still around.
I don't know. It's like because you can download everything nowadays, so I'm not sure why you would even need it, right? So, and you buy your keyboard off Amazon, and I don't know. Good question. Yeah. So, let's try to transfer what we just discussed, and there's a lot in there to junior mining. Like, what are you doing right now in junior mining as a trader? Like, are you sitting tight? Do you sit on a lot of cash? Are you actually trading something? Like, and what are you trading if there's anything to trade? Like, what are you doing right now?
Um, Not a whole lot, to be perfectly honest. I participated in November, in the last couple months of last year, I participated in about a handful of private placements for companies that I really like and really excited about. So I couldn't trade those if I wanted to. So I'm just holding and waiting for news and great results to come out. Hopefully, as far as like, my stock portfolio, I have picked up some more shares of different stocks in the last week or two, but I would say I'm trading less than I have in the last year. It just I bought some white gold because it's 73 cents a share and it's back under 100 million market cap, and it's just like, man, how can this stock be this cheap? With all they have, and it's just because, well, it's the seasonal thing, probably is a big part of it. They can only drill and explore from June through October, and so we're in like the seasonal lull. But I think for a stock like white gold or anything like that, that's a farther northern play, it's definitely the time to make a shopping list and maybe not buy this exact second, but probably in February or March, there'll be some really good buying opportunities because the market just, when there's less news and there's less of a near-term catalyst, the market just fades off. And we see that in the juniors all the time, where just the buying just sort of pulls back, and there's always a little bit of selling to knock these stocks down, and then you just wait for your spot. And then you jump in, at a low, hopefully, right?
Hey, fingers crossed for that. And let's talk about a couple of your top picks, maybe some stocks. You mentioned white gold already, and I know you always participate also in the ceo.ca stock picking contest. Let's maybe talk about the stocks that you picked there and why'd you choose them?
Okay, the stock picking contest. So my picks were.
I couldn't open it this morning because ceo.ca was giving me some trouble this morning.
Hold on, I gotta recall these three names. Okay, so it was. You kind of put me on the
Oh,
spot
no worries,
here.
no worries. Because I know you published them. I know like how secretive you are with your trading lap.
Yeah, I would say let's wait for me to write about a couple more of these, and there'll be definitely some more opportunity to talk about these companies. But I don't want to like pump them up here at this exact moment on this show. But I'll definitely have more content out about these stocks in the next few weeks.
Perfect. I would suggest wait till December 30th for the final pump. Fantastic. But you put out an interesting article this morning as well. A dozen things I've learned from 40,000 hours of trading, 40,000 plus hours of trading. All right. Like, what prompted you to write that article? to write that? Like, is that more of a memoir? Is it more of a guideline? Like, what was like? It's a shorter one. You list 12 points, but like, what was the goal? What are you trying to achieve?
I blog just based upon how I'm feeling on that day or that morning, and the thoughts that come to my mind. So this is probably um, a consequence sort of the things I'm seeing in the market in the last few weeks, and sort of what maybe a less experienced trader might or could use, to hear or learn, things that I've learned through experience and practice, and failures, and all that. So yeah, it just sort of came to me on Friday morning, and so I wrote it. And I think that it's really important for people to understand. A lot of people want to chase a hot pick. They want to know what stock to buy, and in reality, that's not the most important thing. It's not even close to the most important thing. And I think a lot of people who are new to trading in the last year are going to learn a very hard lesson possibly here fairly soon, or maybe they're learning it already. It's just chasing stocks that are short squeezing, extremely volatile, or buying these call options that are way out of the money, and just gambling that there's going to be a big price move in a very short period of time. It's a very difficult game to play. And when it's going perfect, yes, it's amazing, and it feels like you have an ATM, at your disposal. But in reality, it never lasts. And in my experience, with all of these things, these bubble environments and these day trading crazes, is that not only do the people that participate in it are they not able to keep their profits, they actually will probably lose everything. So they'll have a tremendous run. They'll think that they're invincible, and then that's sort of my point number 8. Every time I felt like I can't lose in the market, the risk of a big setback, was the greatest. And sort of, this is my point. Like, I have a memory, and in a way that's a handicap in an environment like this, because my memory tells me buying this here or chasing this is not a good move, that this could end very badly, and I have no advantage here, right? And so, as somebody who's been through 40,000 hours plus of screen time, I'm more likely to only choose trades where I feel like I have an edge, and I have a clear idea of the risk involved. Whereas something like GameStop, I have no idea what the risk is, and they could halt the stock, and some news could come out, and they could reopen it, and it'd be down 40%. I just have no idea, right? And I'll just say one parting shot about that. There was this volatility exchange traded fund that was like an ATM from 2013 to February 2018, and it was basically shorting the VIX. And so basically, you would wait for the VIX to rise from 15 to 19 or 15 to 20, and then you'd buy this fund, this exchange traded fund, and then it would always go back up because the VIX always fell. And this was like an ATM for many years for many traders. And one guy quit his job and started his own little fund and raised money from his family and friends, and he built it up to several $1,000,000. Well, you know what happened? When we had that VIX explosion, January, February 2018, the VIX went from 12 to 50, and this guy was completely wiped out. Literally, he owed his broker money, because the market changes in ways that you'll never be able to forecast. And it happens very quickly. Sometimes it happens very violently. And people who don't have the reference point to understand what's happening to them in the moment lose everything. And so I see this day trading game with GameStop and Revlon and all these other ones. It's not going to end well.
Yeah, no, very, very, very good points, and I really urge people to read this because it gives you a couple of good ideas on how to trade and develop a bit of a proper mindset as well. Because I'm for myself, like I'm a mining stock hodler. right? And I usually buy a stock and I wait till the end game, till something happens. Like I don't sell on drill news or so. I usually wait through it. Not a good trader. And last summer, like I didn't sell a single stock. Like it was a like I'm just because I believe in the big picture, right? And I'm probably a moron doing that. So compares to you, like how many trades do you do a day?
I mean, it could be anywhere from 1 to
Yeah.
40. I mean, I trade a lot of the S&Ps. So that's sort of like my go-to. I'll trade gold futures or I'll trade S&Ps because they're such huge markets, and I feel like I have a good feel for them. And I do trade individual stocks, but usually my list of individual stocks is like 30 or 40 stocks, and I don't go over to a GameStop or something like that. It's just not my forte.
Gotcha. And we slowly have to wrap this up, unfortunately, again. We've already been chatting for 26 minutes here. And time always flies when you schedule for 20, right? And like, how are you set up? Let's talk gold, silver right now for the next 3 months. How are you playing it? What do you expect to happen?
Well, I mean, I'm a long-term investor in gold and silver, so that doesn't change anything. And like I said, I have a portfolio of juniors that I follow closely and I really like, and I may adjust them from time to time, but those are still unchanged, right? I have a little extra cash that if I'm feeling like we're really going to have a big move, I can plow that in. And if I'm feeling like I want to lower my exposure a little bit, I can take that out, right? And so I would say that right now I have a little bit of that cash on the sideline, just because for the aforementioned reasons. It seems like we're just going sideways here right now, and we're still in search of a catalyst for the sector. And there's a lot of good trading opportunities here and there on a day-to-day basis. So it's good to have a little cash available to take advantage of
Do you have a
those.
certain cash rule, like minimum 10% cash, or like where are you sitting right now?
I would never go under 10%. Yeah. But right now I'm probably about
Oh,
30%.
wow. Okay, that's high. So you're ready to go shopping. And you mentioned a couple ideas and things to look at for February, April, or February, March. So quite excited to get you back on and hear what you're buying. So
All
awesome.
right. Thanks,
Rob,
Guy. I appreciate it.
fantastic chatting with you. Everybody else, thanks for joining us here. Follow at CEO Technician on Twitter, at Goldfinger on ceo.ca, and also go visit tradinglap.co. That's Rob's newsletter service for his subscribers where he posts his trades and his ideas. So make sure to go visit that website as well. Robert, really appreciate you joining us, and you have a good afternoon or rest of the afternoon.
Thank you. Thank you very much, Guy.
Fantastic.